All right, it is 8:10 a.m. Central Time on Tuesday, December 19th, 2023. Let's jump right into our trade planning exercise for today. So heading into the open, our intermediate term bias is bullish and our short-term bias is neutral bullish, and we're using the 47.91.5 to 98.5 area as the intraday bull bear zone. So as long as buyers are holding ES above that area, they can maintain control, and as long as we're seeing signs of initiative buying off the open, there would be potential for the market to head higher into the 48, 12.5 to 21.5 initial resistance, which is a larger time frame area of resistance, and sellers are likely to be active there. Now, with the situation today, if buyers can hold ES above 47.91.5 to 98.5, they can maintain control, but if they fail to hold ES above that area, then we could have a trapped buyer situation, which can result in a move down towards Monday's low and the 47.67 to 71 zone. So today we need to give more edge to the buy side above the intraday bull bear, but we also need to be prepared in the event that the market fails to hold above that area, in which case we could get a move down into the 47.68 high volume node. So let's start with the long side. If buyers are holding ES above the bull bear zone, then they can maintain control, and as long as we're not seeing any obvious signs of intraday weakness, our focus should be on the long side. And in this case, we want to make sure that we're scaling out ahead of the pre-market resistance zone. As far as the high probability target goes, I think that's fine at 48.12.5. That is the beginning of the initial resistance zone. And then our final target by default is set to 48.23 and we will probably revise that. Let's take a look at the potential short at the 48.12.5 to 21.5 area. So if sellers are active at that larger time frame area of resistance, the expectation would be for a move back down towards the broken pre-market resistance zone and perhaps the intraday bull bear. So in this case, we're going to use the overnight high as the high probability target, and we're going to use, in this case, 98.5 as the final. And again, this is also optimistic, but the final target usually is, so that's perfectly fine. So in this case, we can see that an entry at 48.18 would give us 3R into the overnight high and 47.98.5. Let's actually be more defensive here and see what entry we'd need to get 3R into just the overnight high. So we can see that is 1875. So I'm going to use that information to set my final target to just 18, getting out ahead of that high probability entry. And that gives me a entry at the intraday bull bear at 47.95.5. So this is going to be a potential long setup off the open. Now, if the market fails to hold the intraday bull bear zone, then there would be potential for a trapped buyer situation. So I'm going to make a copy of this zone and I'm going to set it as a short just in case the market fails to hold that zone. And in this situation, our high probability target is going to be the previous RTH low, and our final target is going to be the 68 high volume node. So that way we're prepared to take a short at 47.94.5. Now this is going to require a real-time market read, so I don't know if this setup is going to trigger or not, but in the event that the market fails to hold that zone and then pops right back up into 47.94.5, that could be a potential short setup. So if we're seeing obvious signs of intraday weakness, then 47.94.5 could work as a nice entry on the short side, targeting a move down into the initial support or yesterday's RTH low and the 47.68 high volume node. Now, in the event that the market heads higher beyond 48.21.5, the 48.29.75 to 37.75 area could cap the upside on the day as long as the market is continuing to run on below average volume. Now, if it continues to run on 57% relative volume, then it's unlikely that ES will even reach that zone. But even if we get a pickup towards, let's say, 70% or 75% relative volume, I think the 48.29.75 to 37.75 area could cap the upside. That doesn't mean that we need to get a big response off that zone, though. And I think that in this situation, we may just get a rotation back down towards 21.5. So I think the high probability target in this case should actually be 24.25, and the final should just be right around 21.5. So it's going to be a very defensive play. So if the market does go up there, 35.5 would give us 3R, even if we just get a reaction into 21.5. So that's a potential short on the upside. And I'm also going to make a copy of this zone. And in this case, I'm going to put my stop beyond 24.25. I'll set it to 25.25 just to get a more defensive entry. So there's a potential short at 18.75 or maybe 21, depending on how the market reaches that zone and what kind of volume we're seeing. But I like that this is a back of zone entry. It's much more defensive, and it's much more likely to provide a nice response, especially if the market's exhausted into that zone. So we have a potential short at the 48.12.5 to 21.5 area. The entry price is going to be either 18.75 or 21, depending on the level of strength we're seeing in real time. And of course, if we're seeing purely trend up type conditions, then it's not going to make sense to short at all, because we will have bullish time frame alignment in effect above 47.98.5. And then in the event that we do end up selling off on the downside, I think that we will still get a response at 47.57.25, 64.25, except the targets I think need to be a little bit more conservative. I think the final should be 80.25 in this case. So we're not going to look for too big of a move, just to move into the RTH low from Monday. I think this could work well as a nice long first time down, and the 47.37.25 to 47.75 is the range extreme. So I would expect buyers to be active there with much more force. And in this case, I think it makes sense to use the broken support at 57.25 to 64.25 as the high probability target. So we'll just use 58.75, and then the final can be the high volume node area around 47.68. So we'll get out 1 point ahead of that. So 41.75 would give us 3R into 58.75 and 67. So we have potential longs set at 47.61.25 and 41.75. These will be resting order buy setups. There is a discretionary long at 95.5, as long as we're not seeing any clear and obvious signs of intraday weakness. If the 47.91.5 to 98.5 zone fails to hold, then there could be a potential short, because we could have trapped buyers, and that can then push the market down towards the 47.68 high volume node. And in the event that we head up, there's a potential reactionary short at 18.75 or 20.75, and another reactionary short at 35.5. Although if the volume stays this anemic, it's unlikely that the market will get there. And to wrap it all up, just a reminder that this is a trade planning exercise. As day traders, we always have to take the real-time intraday situation into account, so there may need to be some tweaks made to these trade setups, but this gives us a very nice foundation to work off of heading into the open, and we can be sure that we are as best prepared as we can be. So we're going to wrap it up with that. If you found this video to be helpful, then please do like it and share it with other day traders, and we'll end it with that. Good trading today, and I will catch you in the next one.